Good morning and welcome to FX Street Currency in Play. I'm Matt Brown. I'm joined by Eddie Toppick, who is head of FX at ADM ISI. How are you today, Eddie?
I'm pretty good, actually. The weather's cleared up nicely outside. It's a beautiful day.
Yes, I got a little bit wet earlier on, but
I'm sorry to hear about that, but I'm glad I didn't.
But the markets aren't too damp. There's lots going on.
Yeah.
Starting off, pound dollar plummets sub 132 with London on London opening. I wouldn't go as far as say plummets.
I wouldn't, no.
But it has given a bit back certainly against the dollar. Dollar yen stubbornly flat around 112.50, 60, and euro dollar at the upper end of its weekly range. So a few things to look at there. But I think more importantly, let's look at the charts you brought along because we can gain more from those. And starting off with the Australian dollar versus the dollar. Now, look, some really weak retail sales figures this morning. I think 4.5-year low for Australia. What's going on there?
Well, I was quite surprised the day before yesterday we saw the Aussie move up because on that chart there we have this possible double, possibly triple top. So it's a very bearish pattern and it had started to follow through. We'd had a key reversal down, adjust, and the market had tried higher and then come back down again. And a few days ago we had a bull hammer, an opening, a big move down, and then it closed just over the previous opening and just above it. And that had bounced up off the medium moving average, which was at 77.82, or just below that was 77.82. So that's the reason it bounced up. And I could see the follow through on the day before yesterday, but then I was like, there shouldn't really be much of a follow through if this is still a big pattern of it's heading south. So a little bit of a follow through and then we'll come back down. And lo and behold, it's come back down. And the retail sales were indicative of what's actually going on there, which is the Aussie dollar overall has been going down for about 3 weeks now, nearly the full length of a month. It's coming to its first real support, well, second real support. The first one was at 78.47, which was a 50% Fibonacci level, and it punched through that, and it's closed a number of times below that. But below that, we had this medium moving average, which was gradually ascending, gradually, and it tested it once and didn't like it. I've got a feeling now that this will be tested again, so we're going to see something down to about the 77.80 area again, potentially. If that breaks, really, we haven't got that much stuff. There's a little bit around 77.5, but we haven't got anything that really till just about 76.70, which is a long moving average at the moment. And there's a whole band of support going back, as you can see, in May and June and things like that. So the target for the head and shoulders is marked on the chart as an X, and that's around about the 75.60 area. So that's just below the low from this start of this move, which was the beginning of July. So we had the beginning of July move, it doubled up twice, had a little bit of a hesitation again on the top side, and it started to come down. If it follows through down, and it's very, very key, it closes below 77.82 at least twice consecutively, then we're going to see a potential down move to about the 76.70 area with a potential target ultimately, if this head and shoulder comes about, of around about the 75.60 area. Now a lot of things can happen in between, but that's what it's looking at the moment. And the retail sales obviously following on to what's happening in other things, which is we've seen the Aussie come down for quite a bit now. And there was just a recap bounce, a reaction bounce, people taking some money off the table as it came down to the medium moving average.
So potentially a seller for choice, but look out for those closing levels.
I think at the moment I would call this market bullish with a question mark because I think it's about to turn neutral. Understood. Neutral is if it goes below that medium moving average. Bearish if it goes below the long. So it's coming out of a bullish phase, as you can see by the double, triple top pattern. It's coming out of that and it's heading towards a neutral market and potentially to go bearish.
Understood. Moving on to the euro versus the dollar. Sold off a little bit of late. Dollar strength, euro weakness.
And this is a really interesting set of patterns here. We've had a head and shoulders top. It's clearly seen on the chart there. It's that sort of crowning glory there you can see right at the top of the market. You know, brilliant key reversal down 3 weeks ago, and we start the move down. It's been fairly quiet this week. But it's also another pattern forming, and I draw your attention to this. If you take August as being one shoulder, you take September being a crowned head, effectively, then we are forming potentially the next shoulder for another bigger head and shoulders top. Now, if that happens, the move down on X is down to just under 116, which is coincident with a load of Fibonacci levels, as you can see, plus also the rising medium moving average, which is at 115.93. So there's a hell of a lot of support down there below the market. It would be reasonable for it to try for that area if this is actually going to happen as a pattern. It wouldn't surprise me if it went up to just short of 119 before coming back down again.
Understood.
Because that move down is the second shoulder. So that's what I think we're in. We're just moving up to go over the peak. If it goes over 119, 2 consecutive closes, I think then this pattern's disputed.
Yes.
And as you can see, I've had for years, I've spoken to you about, well, not years, for months, about this Andrews pitchfork, which has been the ruling thing of the market. That's gone. It's broken. It's done.
Understood.
It's not going to be there anymore. So the bullish incentive, which has been there since April 2017, is now finished. We're now moving into another phase. We're not yet neutral, but we're moving towards neutral. There's enough planning going on at the moment that makes me think potentially there is actually a move down below the 116, which would be neutral. Bearish should be below 111.5, which is the long moving average.
Understood. And looking at euro sterling, some moves yesterday with sterling.
Well, this is the first impact of what happened with Manchester. With the speech in Manchester, and also to a certain degree a dissipation of the Catalonia events. We've seen the euro go down and down and down against sterling, and in the last week it's turned around, and it started to hit some resistance. The resistance had been around the medium moving average, which was at 89.05. Now 89.05 I thought was a reasonable area for it to sort of slow down and maybe take another breath on the upside. It'd be very interesting to see what happened, what developed from there. Because of what happened yesterday, we've punched through that resistance. It is now support. But it's not confirmed as support. We've only had one day, which is today, above it. We need at least 2 consecutive moves above it to confirm it. And it would then move from effectively neutral, which is what it's been, into mildly bullish.
Understood.
But it's not confirmed yet. So watch out for that. The key support areas is 88.34 down to 88.10 area. That's key. And then to turn it bearish, you'd need closes below 87.30. So moving from neutral potentially to bullish, but you'd need a couple of days yet. Probably early Monday. Monday's when the Catalonia. Yes. So it'd be very interesting to see what happens then.
Understood. So quite an exciting one for the start of next week. Yeah. And maybe in the meantime, look at cable.
Well, this is the effect of what happened in Manchester, as you can see. The market is bullish still. We've got a lovely Andrews pitchfork, which is still within, but we have closed below the first real level of support, or we've punched through the first real level of support, which is 132.14, and we're below that at this particular point in time. We need 2 consecutive closes to start to make that actually happen. But we'll carry on being bullish until we get further lower. And you need to be below 131.10 initially. Medium moving average is at 130.15. Those 2 areas, there's a huge area of support which is around the 131.30, 130.15 area. Then again at 127.69. 130.15 area, that's going to be a neutral. The market will move into neutral from bullish. If you go below that 127.69 area, then it will go into bearish. But at the moment, we're moving towards neutral. We're not necessarily there, but it's at a good run up. It's still looking bullish on that Andrews pitchfork, and until that's destroyed, it's still going to be the overall theme of the market.
Understood. Look out for non-farm payrolls tomorrow.
Oh, for everything. For everything.
And finally, kind of a currency unto itself, regardless of everything else going on. Bitcoin, an interesting chart as always. And just talk us through a few things on here.
It's a great market, the chart, because it just follows some of the principles fairly well. I know it's a messy chart, first off. I apologise for that. I've tried to put some labels on it. The late part of September had been basically overseen by indecision. We had mid-September 2 indecisive doji crosses, one next to another. when the market tried to go lower, so it then went higher. Then we had an indecisive doji then on the top side. Then it came back again, and we had another indecisive doji. So it's basically going between support and resistance, but gradually moving higher, as you can see by the Andrews and this new line which I've drawn, the shift pitchfork, which goes through the upside of which is around 44.80, the one that's key at the moment, 44.80, where you can see earlier this week the market had gone up, whacked it, and come straight back down again. That's why it's a good market to chart, because you can draw a shift pitchfork on it, or an Andrews pitchfork on it, or use Fibonacci or Fibonacci projections or moving averages or various anything that's your fancy, and it'll actually work pretty well on this. It came up there to 44.80 and it's come straight back off. It is still bullish. It's an ascending gradual market. Look at the ranges. They're not as vast as we saw earlier, well, this time last month, or toppy, or they're in the middle of the range. 39.75 is 50% fib. That's the support of the market. Below the market, there's a hell of a lot around about where is it? That's the 37.40 area, and that area of support will also act on it. All of those are support. But if you look above that center time that I've drawn there, where it came up and came off, there really isn't anything until the high. You've got some high around about the 46.80 area, which was a previous high back in September, but there's nothing really there until we try again the high. And that's why I've got the projected fibs above the market, so we can actually have something to look at for next time if we try higher.
If we get to that 5,000 level again.
It's not come off that much. I'd be interested to see if it turns around above 3,600. If it turns around above 3,600, then you've got ascending lows, which is a sign of a positive market, and you've already got ascending highs. So it's a gradual. There's nothing coming into this which is bubble-like at the moment. The bubble got slightly squeezed mid-September, where all the Chinese coming out of it and everything else. So I think that now you're seeing gradual new reinvestment coming in potentially, but it's a good market at the moment to look at.
Fantastic. And finally, just to round up, quite a busy day. We've got quite a lot of Fed speak. We haven't put it all on here, so look out for that on your FX Street calendars. But key thing, I think the ECB September meeting minutes are going to be key. Just look for direction on potential QE tapering. What are the members saying, and what will Draghi say at the next meeting is going to be key. Obviously, initial job list. So lots to look out for. But as you've already said, probably non-farm payrolls tomorrow.
Non-farm tomorrow
is all it's about this week.
Yeah, I mean it's going to be an interesting number because it will be post hurricane. And we see how that works out. There's a lot of stuff going through. For example, there's huge demand potentially for autos because of the hurricane damage, etc. And people are moving into those areas. There could be potential interest in that. I'm not an expert in the area, but it's an interesting one to look at because of the dynamics of what those hurricanes have caused. And then also in the background, you've got Puerto Rico as well, which is the end of October, but there'll be a lot of talking between now and then.
Understood. Well, lots to play for. Thank you very much for joining us today, Eddie Tolthek on FX Street Currency in Play.
Thank you very much.